Alright, so in this video we are going to read together an article from Reuters that illustrates quite well an important shift in the world of physical commodity trading. So if you want to break into commodity trading, or if you run your own physical commodity trading firm, I think it's important for you to understand where the industry is going. It's like this hockey said, you want to skate to where the puck is going, not where it has been. You need to understand where the industry is going to take better decisions. Anyway, let's jump on the screen and read the article. Top global energy traders face multi-billion cash quandary. Quandary? What does it mean? Quandary. Uncertainty over what to do in a difficult situation. As the world's top global energy trading houses prepare for their biggest annual industry get-together this week in London, they face a growing problem: what to do with their cash. Yeah, that's a big issue, man. Give me some. I really want to have this problem. But that's true. This week is IP week in London, so all my friends are going there. Most trading houses, which are privately owned, are controlled by their employee, disclose little about their cash position, equity, or dividend. But according to more than 10 trading and bank sources and Reuter calculation, Vitol, Trafigura, Mercuria, and Gunvor are collectively sitting on billions of dollars, even after paying out record dividend. So this is true. So all those companies are private companies, but it's quite easy actually to know their numbers, because they have to disclose their numbers to their bankers, to their financier, and so on. And you know what? Those number leaks. If I want to know the latest numbers by Gunvor, I can just call one of my banker friends that I know they finance them and can get them. So it's quite easy to have those information. And I even think that like Trafigura, I think they even disclose them on their website actually. Let me just check. All right, Trafigura, that's right, they changed their logo. Now they look like Google or something like this one. They must be extremely ESG friendly, or yeah, look. This is, I guess, from one of the mine, a copper mine. Yeah, obviously a woman. Yeah, another woman. Yeah, it's well known. I mean, Trafigura doesn't have a white dude that works there. Anyway, so what I wanted to do, yeah, finance. Let's have a look. Revenue, group equity. There, you see, you can have those numbers. I mean, they are quite open with their finance actually. Anyway, we borrow much less from banks and waiting for good investment opportunities, but those are slim, especially in loss-making green energy, said an executive at one of the top trading firms who declined to be named. Okay, what does it mean? Loss-making green energy. It means that all those renewable, it doesn't work. Everyone is losing money. It needs to be subsidized by your money, with your taxpayer money, for them to make money out of it. So it doesn't work. Trading houses, which already control large areas of global oil, gas, and power markets, are finding it difficult to grow, while poor returns in recent years on wind, solar, and hydrogen assets have irked, I don't know what it means, some investor. I guess it means that they lost money, so the guy doesn't want to do it again. The cash conundrum is likely to be one of the topics of the table as traders gather for reception and parties in London ballrooms and pubs for International Energy Week. Vitol, the world's biggest trader, has increased its total equity to 26 billion, and even after paying 5 billion in record dividends after earning 15 billion in 2022. It's a non-public balance sheet, which has been seen by Reuters show. Yeah, man. I mean, the last 2 years, the bonuses were completely insane in those big commodity trading companies. I even had like students of the Shipping and Commodity Academy that work for the big firms, Vitol, namely, and man, I think their first bonuses were like, I don't want to say wrong numbers, but they were like multiple six figures, and they were kids, you know. They made so much money. But yeah, that's insane. I mean, the remuneration is completely insane. And its equity will probably rise close to 30 billion based on 2023 result if Vitol sticks to transferring a significant chunk of retained earnings to equity. Two banking sources familiar with the company performance said. So now the question is, why are commodity traders buffing up their equity? Like 30 billion in equity, it's a lot for a trading house. Because the big idea behind a trading company is like you are going to have like very low equity, and then you are going to borrow money from banks, financier, whoever, to leverage your equity to make as much deal as possible. So you can have a very good return on your equity. So that's basically the playbook of a trading houses. But now it seems that it's changing. So I kind of know and understand why, but let's see what they say in the article. Meanwhile, Mercuria and Gunvor has accumulated around 6 billion each in equity and retained earnings in recent years, source familiar with the result told Reuters. And by the way, it's quite funny to see the difference. Like Gunvor, Mercuria, Vitol, Trafigura, they are the 4 biggest energy traders in the world, privately held companies. And you can see that Vitol has 26 billion, and then we have Gunvor and Mercuria, fourth and third. They have accumulated each 6 billion, which is a huge difference. So it's like what we see in Monopoly. You know, the first one, the biggest one, is so above the other one. It's a bit what we see here. It's funny. Equity figures for Vitol, Mercuria, and Gunvor has not been previously reported. All 3 companies declined to comment. Yeah, as I said, they declined to comment, but I mean, we all know what the numbers are. I mean, we kind of know. Rival Trafigura disclosed in its latest report its equity grew almost 2.5 times to 16.5 billion in the last 4 years. So one funny thing is like, maybe you know that Claude Dauphin, one of the founder of Trafigura, died 4 years ago. I don't, and basically he had a lot of shares from the company. So Trafigura had to pay up the shares to its heirs. And I've been told, I don't know if it's true or not. I don't know if, I don't know. But I have been told that Trafigura purposely made very little profit for the last 5 years because they had to pay up the shares of Claude Dauphin. So I don't know what are the numbers, how they can put the numbers on the value of Trafigura, but they made the company less profitable, and it was quite easy to do with a company that size, to pay as little money as possible to the heirs. So that shows it. And maybe this is like only a theory, a tinfoil hat theory, I don't know, but that's whatever. But knowing the people that work there, it's extremely possible. The equity of trading houses is still dwarfed by all majors such as Shell with 188 billions or BP with 85 billions, according to their latest report. Yeah, obviously, but this is not the same business. Exploring, I don't know, an oil rig, it costs 5 billion to put together. So yeah, they're not in the same business originally. Margin calls. So this is why it comes so interesting. Until a decade ago, most traders preferred to have assets, low equity or cash position, and pay out most of their profits in dividends to their employees' shareholders. Yeah, exactly what I said. The exception was Glencore, which began trading at Smart Rich in 1970s and gradually amassed coal and metals assets in went public in 2011, raising 11 billion. Yeah, so Glencore is the only, but now Glencore is more like a mining company rather than a trade. I mean, yeah, the model is a bit different. Glencore has always been a heavy asset trading company, especially with the merger with Xatras. I don't know how to say this. But anyway, total equity is calculated as the difference between assets, including retained earnings and liabilities, and is key to determine how much a company is worth. Exactly, I don't know how they calculate how much the company is worth, man. That's a good question. I don't know. Trading houses have bought assets over the past decade, from oil refineries to wind farms and metal mines, using profit and money borrowed from banks while keeping their cash reserve low. That changed in 2022 when gas price soared after Russian gas supply to Europe dropped as a result of Western sanctions to aim to punish Moscow for its invasion in Ukraine. Traders often hedge their position with derivatives, usually borrowing 90% of the money to buy them while using their own cash to cover the remainder. Okay, so let me explain here. So what they are explaining is, the big traders, they had clients for gas, okay, with a long-term agreement. So what they do is they sell the gas, okay, the physical gas that they are going to deliver, but on the other side of the trade, they hedge their sales position with a sales on the future market. What does it mean? It means that if the price goes up, they are losing money on the cash, on the future position, on the future market, okay, on the paper market, they are losing money, but they are making money when they will sell the gas. All right, so this is how they make money, on the margin. But on the other way around, if the prices of the commodity dropped, they are going to make money on the future contract, and they are going to lose money on the physical part of the contract. All right, this is how hedging works in commodity futures. But when the market is in extreme conditions, like what we've seen during that time, they are losing too much money on the future side. So, and the banks are like, hey guys, you need to put more money because you are going to get margin call. So that means that we are going to liquidate the money that you put as collateral. And this is the worst thing because the bank doesn't really care if the trader has a counterparty as a other leg of the trade. They are not going to say, oh yes, we can take your future contract to collateralize the margin call. No. The commodity trading firm need to put cash to cover the margin call. And even I know people in all of those firms, and the guy at Mercuria, Gunvor, they were really struggling to get the money. Yeah. If price soars, exchanges ask traders to contribute more of their own cash in so-called margin calls. Yeah. We all faced margin calls and rushed to borrow from banks. This is when we decided it was prudent to put aside more cash. A second trading house executive said, yeah, so people learn. So if when the price skyrocket, you don't want to lend them more money. This is what the banks basically were saying. Like, look, you are at the top of your credit line. We don't lend you more money. But then, what are going to be the reaction from the trading house? Okay, man. If that happens, a volatility and event like that happens a lot. Again, we need to have like more cash to to avoid to be liquidated. So then, what does it mean? It means that the traders are going to borrow less money from the bank. And I'm pretty sure they're not going to be happy. Anyway, so let's carry on. Self-finance. Traders such as Trafigura works with 150 banks and have as much as 50 billion of credit line available. At the peak of the margin call crisis, traders used the line in full and some banks refused to boost lending, while encouraging traders to find alternatives. Exactly what I've said. I'm not going to give you more money, you need to find alternatives. But then when the market is in normal condition, I want you to use your credit line from me. Most traders decided to retain earnings as equity. And actually it's the same strategy that I'm doing in all my companies. The earnings will transform them in equity over the time. That's the long-term strategy. We beefed up our equity, and as a result, more of our trades became self-financed, a third trading house executive said. When traders borrow less, banks are less in interest and cannot increase their lending to other clients if they keep large credit lines open if these are not used. Yeah, so I want you to take my money and to use it. Yeah, so it makes sense. Banks didn't like going above credit line in 2022, but they equally dislike it when traders barely use their line in 2023, said a banker at a top US bank active in the sector. Bank borrowing will rise again once interest rates fall and traders spend more on investment, one of the three trading executives said. But that was not happening yet. Some traders just borrow money and put it back in deposit with the same or different banks, so it pays interest. A first trading executive said, oh, this one is funny. I didn't know that. So basically what they do is they use the credit line and then they put the money in another bank just to make the first bank happy that the interest is paid, and they don't even use the money to trade. I didn't know that. Yeah, man. So what is happening basically here? So it shows that the traders the big trading house, they've seen that they almost got liquidated, which was very difficult with the bank when the market was in a high volatility mode. So they learned, they're like, oh, look, we cannot trust them. This is not a reliable partner. We need to have a cash reserve on our own. What also it means, and this is like the thing that Reuter doesn't speak about, but it means that the traders will be able to self-finance more deals. It means that they will do trade with sanctioned countries, with sanctioned product and so on, that are legal, but that the bank doesn't want them to do. Okay, let me explain again. What I want to say is, like, now that the traders don't need a bank to finance all their trade, which was the previous model, they can trade with countries or on product that a bank wouldn't want them to trade with for whatever reason. So what does it mean for the industry? I mean, if you are a small business owner in this industry like me, this is the type of thing that you need to think. Okay, what does it mean for me? I think it's pretty evident, but yeah, you need to think about that. Yeah. All right, and if you are a young student or a young worker that want to jump into commodity trading because one day to hope to get those multi-million-dollar bonuses, check the first link in the description below and you will land on the Shipping and Commodity Academy, which is my school where we help young, eager, clever people to jump into the industry. All right, man. Ciao.